Please join me in welcoming the moderator for our next session, Ryan Rugg, Global Head of Digital Assets at Citi, joined by distinguished guest, Superintendent Adrienne Harris from the New York State Department of Financial Services.
Welcome. It is a true pleasure to welcome our next speaker, who is a trailblazer in this industry. Between innovation, regulation, and impact, Superintendent Adrienne Harris has been making a true difference in this space, bringing fintechs as well as large institutions like Citi together. Welcome to the stage.
Thanks for having me. Good to be here.
So the last 4 years you've been at the New York Department of Financial Services. Can you tell me a little bit about your career and what you've been working on recently?
Yeah, absolutely. So it's 4 years already, which is hard to believe. I started my career here in New York at Sullivan & Cromwell doing financial regulatory work. From there to the Department of Treasury and then running the financial services portfolio in the Obama White House at the NEC. Before then going to Silicon Valley myself and helping to start a fintech company that we grew and took public. Then I spent some time in academia teaching financial regulation and fintech entrepreneurship at the University of Michigan before taking on this role now almost 4 years ago. And I think for those who aren't familiar with DFS, we oversee about 3,000 financial institutions, state-chartered banks and credit unions, including about 120 foreign institutions, 15 GSIBs. We oversee insurance across P&C, life, and health. And then, of course, we are really the only prudential regulator for now in the country, state or federal, of cryptocurrency and digital assets.
Yes, you brought up a really interesting topic about how New York Department of Financial Services has been a leader in this space since 2015 with the BIT license. How has this changed in the last 10 years since the industry has greatly changed? Yeah,
it's changed quite a bit, and we actually license or charter our virtual currency companies in two ways. One is through the BIT license, the other is through our limited purpose trust charter. I think one of my predecessors, Ben Losky, was really prophetic in putting the BIT license regulation in place, but it has changed enormously in the last 10 years. We see now, I think, more interest in the limited purpose trust charter, which has really grown as a way for people to enter the market. And of course, we've done so much to operationalize the reg since it was first put in place 10 years ago. So now the staff is over 60 people devoted to virtual assets and digital currency day in and day out. We have far more regulated entities. We've done, in my time, 9 pieces of guidance around blockchain analytics, around stablecoin, market manipulation. So we've really added quite a lot of meat on the bone so that there's transparency and clarity to help innovation thrive in New York.
Which I think is really important for, myself as others, like that transparency and clarity, especially for large institutions like myself that work at Citi, that clarity helps us, and ensures that safety and soundness, which I know has been a real focal point for you. So, here we are at Stablecoin. Stablecon. I think we'd be remiss not to mention stablecoins and how they present a huge opportunity for fintechs in the audience as well as large institutions. There's been a lot of, legislation out there around these various bills. Kind of give us a high level of what you're thinking of a state versus federal and how that's going to play out.
So we are big proponents of having a federal regulatory partner in the space. For all the bills that have traveled through Congress over the last now 3 years, we've really been right there with Democrats, with Republicans in the Senate, in the House, providing our technical expertise because this is a space that we have deep experience with. We're so grateful to our federal partners for bringing us in as they've been working through all these various bill drafts. I think what's important for us in these bills is we really want to make sure there's a robust state pathway that continues to exist, right? What a shame it would be if state regulators like DFS were preempted after we've built up a decade of experience in this space. And we want, just like in banking, we want institutions to have that choice of going a federal path or going the state pathway. So that's been really important. But of course, when it comes to things like cybersecurity requirements, illicit finance requirements, right, BSA, AML requirements, when we think about stablecoin reserving and redemption requirements, DFS and New York are now really a model, and we hear that regardless of party, regardless of which chamber in Congress, right, is that they're really looking to New York as the model for what they want to build on the federal level. And like I said, there's really nobody more eager than us to have a federal partner regulating the space.
And I think that's really important. And as the way I understand it is that, the language that was put into the bill that the state with the, I guess, higher regulation will be the de facto state, because you're not going to have like a Iowa issued coin or a New York issued coin. It's going to be global in nature. How are you thinking about that?
Yeah, I mean, it was really important to us, and I think it's been very important to several members of Congress, that we don't create a race to the bottom.
Yeah, exactly.
Right? And especially you have a state like New York, right? And there have been complaints, of course, about the rigor of the regulation, but I think it's really proved to be very effective by evidence of the fact that we didn't license FTX and Voyager and Celsius to do business in New York. And so I think the way they have been crafting the legislation to say, right, states would have to be certified and prevent this race to the bottom and really be able to look to a state like New York as a viable state pathway is an important piece of the legislation.
So you talked a lot about, some of the safeguards you put in place. Can you talk a little bit about, from the stablecoin issuers and managers, what these you put in place?
Yeah, so our guidance is now several years old on stablecoins. So we've done a couple of things in the guidance. We required the one-to-one reserving with cash and cash equivalents, right, in FDIC insured institutions or otherwise insured institutions. We required T+2 redemption for stablecoins. We require attestations and public transparency about the reserve asset mix, right? So these are all things that we've seen mimicked in various drafts of federal legislation and in foreign jurisdictions. And then across all of our virtual assets, many of the same requirements that apply to our banks apply to our crypto companies. So the same AML BSA requirements that we put on our banks apply to our virtual currency companies. The same cybersecurity regulations we put on all of our banks and insurance companies apply to our crypto companies. We also have really robust and conservative capitalization requirements. And then we have full scope bank supervision. So we have examiners that go in the same way they go into our banks and insurance companies on a regular cadence to examine these institutions, provide them with grades, right, just like the CAMELS ratings, and then to require remediation. And then, of course, if need be, it's not our first choice, but we do bring and have brought enforcement actions where people violate the laws.
Yeah. So you mentioned banks. So, thinking about it from like a Citi perspective, how do you ensure that the banks that you regulate have a position within this new ecosystem? How are you thinking about that?
Yeah, it's a really great question, and I think very timely given all the things that are happening in DC. For us, we require our state chartered institutions to get prior approval for certain virtual currency banking activities. That's the term of art we use. And so the banks come to us with a proposal, their business plan, thinking about how they want to engage with virtual assets, whether it's through standard custody models or if they're doing some sort of tokenized ledger, right? And those are things that then we review. We will tell the institution whether or not the activity they're proposing does in fact require pre-approval under our guidance. If not, they're free to continue on executing their business strategy. And if so, then like every regulator, right, we look at all kinds of documentation. We'll really kick the tires to make sure the risk management framework is sufficiently robust to make sure the bank is prepared to engage in this activity in a safe and sound way.
Yeah, I've been spending a lot of time down in DC as well, I'm sure as you over the last, this year. And a lot of the things that, I've been talking about is like same risk, same activity, same legislation. So ensuring that the same, kind of governance and standards that you put on the larger financial institutions that, because I know that consumer safety has been one of your big focal points on that, to really ensure that as we start to scale.
Yeah, absolutely. I mean, consumer protection, restitution generally has been a big focus of mine. We've returned now almost $700 million back to New Yorkers in the form of restitution during my tenure. And that doesn't count the over $2 billion in virtual currency we returned to consumers all over the country as a result of our action against Gemini Earn. So that's really a focus. But I think to your point, as we think about virtual assets sort of standalone and their integration with traditional finance, we want to make sure that institutions are prepared to protect consumers and make sure that they can be safe and sound. And I think to that end, one other piece of guidance that we did for our virtual currency companies is we said, consumers have to have a way to get real customer service from you the same way we would expect from other financial institutions. It's got to be clear to consumers what number they can call or where they can find the chat bot or where they can send an email. You can't hide it so far away from plain view that consumers really have a hard time registering complaints with the company. And so we've really taken that consumer point of view and that customer point of view as a regulator when we think about all of our regulated entities, but especially I think some of these companies that are newer to being regulated.
No, that makes a lot of sense. I think that, I'm aging myself, but I've been in this space for 10 years now, and the technology has definitely matured, but as well as the industry. Like as you mentioned, like consumers being able to call and get a hold of somebody. Right. And in my prior role, I was at IBM, and some of the names you mentioned before that you turned down, one of them, came to us and was doing an RFP for a new core banking system, and they were managing risk on Google Sheets. Like literally on Excel, and they had taken $35 billion in that year. So to ensure that safety in the system is really important. So, reflecting a little on that, how have you seen that change over the last 10 years?
Yeah, I think it's such a great point. I mean, the ecosystem has really matured quite a bit. Even in my 4 years now at DFS, I still think it has quite a way to go. I think some of that is having gone through hard times. So if we think about banking and the innumerable banking crises, right, over several hundred years and even over the last few decades, right, those experiences, I think, inform how an ecosystem engages with regulators and other government stakeholders. This space hasn't been through that in quite the same way just yet. So it is interesting how much work I think I have done, the team has done, to socialize stakeholders in this space to how you engage with regulators, how you meet expectations, even just the tone you take. But I would say the biggest areas for improvement and the areas where we find that companies in this space struggle the most is around BSA, AML, and cybersecurity. Those are the areas where I think this space still has the most work to do. And interestingly, we do find companies come in and they tell us how they're using this advanced technology to address cybersecurity threats or BSA concerns. And then when there's an issue and we go in to investigate, we find really sort of immature technology, lots of paper, ironically. And so I think there's lots of room for improvement there in particular.
So advice to people in the audience is really, when they're coming to the New York Department of Financial Services, think about BSA, AML, cybersecurity, and use technology, not necessarily paper, to kind of
use what is effective. But I think, we often get people who are they're used to pitching.
Yeah.
So I say, don't pitch your regulator, right? We will find the facts one way or another. But what I say to people too is, come into your regulator, come into DFS in particular, early, often. If we read about it before we hear about it directly from our regulated entities, that's always a problem. But by and large, I think people underestimate how aligned we are at DFS with what the companies are trying to do. And so if you come into DFS and you walk the team through your 5-year business plan and you engage with them in a way that's broader than just a particular regulatory filing that you're put in and you're waiting to hear back on, it's that much easier for the team to put that filing, that request in context, and then to help a company get to yes, right? We really believe in that iterative feedback process. I think what happens is people come in around a particular moment in time, and too often after something has gone wrong, and then we're starting from a bad point. But I think one of the things we've done in my tenure is we've really spent time, as we've built this team of now over 60 professionals, setting up regular cadence meetings with our regulated entities. So most of our companies will meet monthly with their point of contact. And the same is true for people that are looking to apply for a BIT license or a limited purpose trust charter. We encourage people to come in and do pre-application meetings. And the same is true for banks looking to engage in the space. And the more you can have that engagement, typically the better the outcomes are.
And that's something that I learned when I was at IBM with Promontory, who, Pete Martin worked with you for many years at the department, that this engagement this openness to be able to share, to collaborate in this industry. Like, ironically, this technology is decentralized, but we need to collaborate together to make it work. And I think that's, a key message that we have to kind of get out to industry, that like early and often coming and sharing the 5-year roadmap we understand how is going to ultimately help the industry as a whole raise up.
Well, and I would say too, on that note, people often underestimate how much regulators talk to one another and engage with one another. And I think, I often have companies come in and maybe they've run afoul of a DFS requirement, and they sort of say to us, well, that's okay because we're doing XYZ over in Europe or in Asia. And I'm like, that's great. I have a call with them later today. But I do think regulators are doing a lot of work in this space, having learned lessons from banking and other areas, to be better harmonized earlier on, to make things easier for regulated entities, and to think from the ground level how we can make regulation robust so that markets and consumers are protected, but so that compliance is easier for companies. And to that end, one of the things we just launched this year was the Transatlantic Regulatory Exchange, where we've exchanged senior staff with the Bank of England specifically around payments and virtual currency. So we now have some BOE staffers here in New York and some DFS staffers over in London. It was a real fight to see who was going to get those slots, and we're hoping to expand that program to other regulators around the world in the coming months and years.
And I think that's really important. There's been so much talk about like these silos, everything from CBDC or individual stablecoins, but that global regulation, that global collaboration is key. So that cross-pollination, because otherwise we're going to have these siloed coins or siloed that kind of defeat the purpose of what we're trying to accomplish here with ultimately always on payments, liquidity, and the various use cases. So the bill right now with Genius, rumor is it gets passed before August recess is what people are expecting. Then what next for you as a superintendent of DFS? Like how do you think about, once the bill is passed, implementation and
Yeah, I mean, we'll see if the Senate's able to get it passed. Obviously, then it would have to go to the House. The stablecoin version bill that they have is a little bit different, so I imagine there's going to be some work in reconciling the two bills. Obviously, House Financial Services today released their updated market structure bill, so their crypto bill. Then we'll have to see something similar, right, make its way through the Senate. So I think there's still quite a ways to go for federal legislation, but again, I'm maybe as optimistic now as I ever have been about federal legislation getting across the finish line. So we'll continue engaging with Congress until that happens, and then I think once it goes to the regulators for rule writing, similarly we'll be engaged with them, offering technical expertise and comments. So I think even once legislation is passed, there's still a lot of work to be done for the federal framework to be implemented, but I think that's going to be really good for the U.S., really good for the ecosystem, so we're excited for that. And then we'll keep building our framework here in New York. We're constantly working on different regulatory guidances to add meat to the bones of the regulation. Obviously, the state legislature is very active in the space. So I think this is one of the virtues of being a state regulator in the financial capital like New York, is that we really can be a little more nimble, move a little bit faster than the federal government, as evidenced by the fact that we've had this regulation now on the books for 10 years and done 9 pieces of guidance. So we're going to continue leading the charge even when the federal government, I think, has its framework in place.
So it sounds like once the bill gets passed into legislation, then you as a leader in this space, as you said, like New York, one of the leaders in the country, will help others, right? Cross-pollination, you've been kind of exchanging employees, and then kind of implement across the board.
Yeah, and we'll have to see the OCC, the Fed, the SEC, the CFTC, right? As all these bills get passed, they're all going to have to engage in rule writing, and that is a lengthy and complex process, so we'll be there to assist where we can.
That's great. So, advice for some of the startups out here, especially like the stablecoin issuers and managers, engaging with you frequently, often we've heard, but also as they're thinking about new products and, how do you think about that?
Yeah, I think one thing that we see in the space and people underestimate the importance is your your compliance apparatus really has to scale along with your business and product. Right, so we see people developing new products, right?
Yeah.
It's a new protocol, it's a new coin, they want to roll this out. And the compliance apparatus really lags, both in size and sophistication, and that is a mistake. And I think we're clear-eyed about the fact, of course, that your compliance apparatus is a cost center. But if you're so far over your skis with new products and new services and you don't have the compliance apparatus scaling at the same pace, there's just no way that doesn't end poorly. And so we're constantly counseling people. While we understand that it's a cost center, it's especially hard if you're a small company, if you're venture backed, but it's so important in those early stages, and then to build a strong foundation for a growing and going concern down the road, to have a compliance apparatus that's kept pace with the size of your business. I think that is one mistake that we often see as well. So I am cognizant, and I've been in those shoes myself. It is really hard to go to venture investors in particular and say you're going to spend a bunch of money on compliance and lawyers, but it really does pay dividends in the long run.
I couldn't agree more. I think back to my days when I worked for a fintech called R3 for 5+ years, and we were moving so fast at such a rapid speed and so engaged in the market. But we always said, as you move from POC to pilot, before you go to production, you need permission. Yeah. And making sure that you have those governance and standards and compliance set up strong, because otherwise your business will be shut down. Yeah. And I think that sometimes is forgotten in this space, and a lot of us have learned it the hard way, right?
I think that's exactly right. I think a lot of people in the fintech space have learned the hard way that the sort of move fast and break things mantra doesn't really work in financial services, right? It works in lots of other areas of the economy. It doesn't work so well in financial services.
No, I definitely agree. So what are you excited about now? You and the team, looking at this, kind of 2025 and beyond, what excites you the most?
There's so many things, although I think as a regulator, right, you get excited about things and then you immediately start to think about the risks of things, so you get excited and then you get terrified and then you get excited again. I think as we think about cross-border payments, as we think about supply chain management, you think about micro payments and content, right? There's so many interesting things I think we're going to see from the stablecoin space, from the crypto space more generally. I often use this analogy about Amazon and when it just sold books, right? And how if you had said to somebody then, oh, it's going to be AWS and content creation and Amazon's going to win Emmys and Oscars, people might have thought you were crazy, but you just couldn't foresee all that it was going to be. And I think that's still true for this space now as it was 3 years ago. So I think there's a lot of interesting things that we're excited about, and not all of it is financial services related. And I think this is another thing the team and I think a lot about, right there. We don't want to regulate and oversee things that we're truly not supposed to regulate and oversee. So to the extent that there are use cases coming online that are not financial in nature, right, those are things that we don't want to oversee. And I think working with industry to figure out what those boundaries are and thinking about the public policy implications for those boundaries is a really interesting question for us.
Yeah. So you mentioned cross-border, and that's the thesis statement that we started out with as Citi. Our multinationals wanted always-on liquidity and payments, multi-bank, multi-border, hard stop. So that's where we started, and we were only allowed to be within kind of the private permission world. So we built a tokenized deposit, right? Where we've now enabled New York, Singapore, Hong Kong, and UK to have that 24/7. So it's if you think about, if it's Memorial Day in the US, but you want to engage with the Singapore market, typically you have to forecast and park the money there and send it, where now you could do it instantaneously. Yeah. So I think that, bringing that in, but definitely learned a lot of lessons, coming into a TradFi myself. I worked at a startup, then I worked at a large global system integrator, and now sitting within, Citi, that governance and frameworks and oversight, and Superintendent, you have been massively influential in this space and helping to shape a lot of what we've done and the way that we think, because we don't operate in the gray area. Right. Unless it's permissionable, we are not going to do it. So, waiting for this legislation, waiting for the way that you interpret it will help large enterprises like Citi enter into this space.
Yeah, absolutely.
So, it's been absolutely amazing talking to you. I've been dying to ask one fun fact that you're willing to share,
that I'm willing to share. That's the caveat, one fun fact. My guilty pleasure is really HGTV. Like, I cannot get enough of home renovation shows. That's really my, that's what I do when I'm completely spent at the end of the day. Whatever renovation show is on HGTV, that's what I'm doing.
Do you take your learnings and implement them?
I mean, I'm in a Brooklyn apartment, so it's a little hard, but I fantasize about the day when I'm renovating a farm somewhere in a rural area. So maybe one day.
Wonderful. Well, it's been absolutely a pleasure speaking to you. You're a trailblazer. We thank you for all the work that you've done, and thank you for your time. Appreciate it.
Thank you.